right. Good afternoon, everybody. This is Chris Burns with Academy Mortgage.
Steve McCarthy, eXp Realty.
And hope everybody's doing fantastic today. We're here just to kind of wrap with you guys a little bit about any and everything related to real estate and mortgage. So kind of wanted to talk about market trends, what's going on. Steve can talk a little bit about that, what he's seen in the market on the real estate side. And then I can talk about a little bit about the mortgage side and kind of where we are. I know usually most people are wanting to know the same question over and over again. What are rates? What are interest rates? What are they going to do?
Gosh, yes.
Do you have a crystal ball, right? Can you tell me what rates are going to do? Should I lock today? Should I float? When should I refi? Yes, the answer is yes to all of that. I do have a crystal ball, and I absolutely can forecast interest rates, where they're going, what they're going to do. No, I absolutely cannot. So the market is volatile. Interest rates are all over the place. Here's what I will say. That question gets asked to me quite a bit, and I'll say this. The rates are what they are, folks. The rates are what they are. And whatever it is on that given day, I think a lot of people make the mistake of floating their interest rate, or they don't pull the trigger on something because they think they hear something that rates are going to. At the end of the day, affordability should be the focus and the goal, right? So, if you look at rates historically, the average interest rate is in the 6% range over the last 40 years, right?
So good.
Yeah, it's incredible. I mean, when I bought my first house back in 2004, I had good credit, no issues, and I had a 7.5% rate. So I think the focus really as a home buyer shouldn't be necessarily what the rates are. Do rates help? Obviously they do, but look at affordability, look at what your goals are from an investment perspective, and also from an affordability perspective. So
what do you mean affordability? Like when you say affordability,
what I mean is payment, right? So most people on everything they do, they focus on payment. They buy a payment. That's what they're doing, right? So I'm gonna go get a $100,000 RV. Why? Because I can afford the $800 a month payment, right? I can stretch it out over 15. So with a house with a mortgage, I would say that should always be looked at as an investment, right? And you start there and get acclimated to paying a mortgage, right? Because it's different than rent. Mm-hmm. You're paying rent. That's it. Your landlord's covering all of everything else. You get a mortgage payment, you got to look at, okay, well, now everything's on me. Water heater breaks, that's $1,000. That's on me, right? Can you believe that $1,000 for a water heater?
No, I know. I remember it was like $400.
Yeah.
Exactly, $400.
$400. Now it's $1,000. So that's what I mean by affordability. Okay, gotcha. You got to factor in everything, right? Yep. So when we do that on the lender side, we're going to take a look at your income. We're actually qualifying borrowers today for the last 9-10 years versus prior to the crash in the market where you could have a social security number and a heartbeat and give you a loan. State your income and we'll go from there. So that's something that I work with. For me on the side, on the mortgage side, I'm very much I would consider myself a counselor, I guess is what you would call it, in the sense of I'm not just trying to do a loan for any and everyone, right?
Right.
There's people who should be buying right now, and there's people who should be put on a track to get to. Just because you can get a loan now doesn't mean you should get a loan. Does that make sense?
100%. Yeah, we run into it all the time. I have no problem telling somebody, you should not be buying right now. You should be paying off some of your credit cards.
Absolutely.
You should be driving a crappier car. Buying a house right now should not be what you're doing.
Absolutely.
And I'm thinking about somebody right now as I'm saying that, and it's not from a bad place, it's out of love.
Yeah.
You can get a lot further faster if you would just take a step back real quick.
And I think that honestly, that shows that that goes farther, right? So that's, I believe, in my opinion, that and from my experience, that's a customer for life, right? Because you're not worried about a paycheck, right? We can make a lot of money in this industry, and we can do it the right way, which is gonna solidify us in our careers for many, many years to come, or we could do it the wrong way and just look for the quick buck. I'm not about that. I mean, I've been doing this for 18 years. I'm looking for the long term, I've got another 20 years in this career, and I'm looking for customers for life, right? I'm looking for people who are like, hey, he took the time to educate me. I didn't go in there thinking he just wanted to close a loan and put me in the most horrendous loan I could possibly be in. He actually guided me into a better situation financially, right, long term. So he got me down to where I'm debt free. So when I bought my house, all I had was a mortgage payment. And not everybody needs to be debt free, right? You have to take the time to analyze each customer and build a plan for them specifically. I'm not a Dave Ramsey. I'm not even a fan of Dave Ramsey. I don't believe in that there shouldn't be any debt, right? I believe that there is good debt. Right.
For me too. I totally do. But I also believe there is some of the clients that we see that should focus on
Dave Ramsey.
No. I don't like Dave Ramsey, but there is some clients that they're so bad with money or their jobs are a risk or something like that. The focus should be on, removing all the debt.
Well, and I think that's the thing. And that's where the professionals come in and and when you get to know someone's situation, it's like, hey, you've had 7 jobs in the last 2 years. I don't know that you should be looking at getting into a $400,000 mortgage right now when you have $30,000 in credit card debt and you make $60,000 a year.
That's right.
Right?
Yep.
And that $60,000 is based on 7 different jobs in the last 2 years, right? So you have to look at everyone, and it's not a bad thing because here's the thing, and you also have people that have had 7 jobs in the last 2 years, but they're union workers, right? So the union sends them to different places, but their job is steady, it's stable, they're always going to have a job. So you just have to look at each situation. So that's what we do. That's what I do. That's what I focus on. That's what I try to get my team to look into and to do is like educating buyers, right? Education is key. And I think education is key in every facet of life, right? Yep. Like every industry, you should be knowledgeable. You should be knowledgeable about the history of our country. You should be knowledgeable about just anything that you're doing. You should have all of the facts, right? I'm big on facts. What are the facts? And that's how I win most of my battles. That's how I get loans done that other people can't. Is I will dig into the facts. What does the guidelines say? What are the facts? Why can I hold my hat on this? Why can I do this? And why can I make this deal work and get these people into a home, provided they're.
That's a big focus for you. It's a big focus for us too, is being an expert in whatever area of your life that you're working on.
Yeah.
Not just business, but everything.
Yeah.
But not all lenders are created equal.
I'll let you speak to that, Steve, because you have more experience with other lenders than I do.
I do.
I have the experience of me and what feedback I get from.
You should go get your next house financed by somebody else. I'm just saying, so that you could go through the experience that some of our clients are going to have to go to. And I'm not saying they're all bad, by no means, obviously. Yeah. But
and you got to separate also too when we talk about lenders. You got to separate personality, right, and like whether they're nice or they're cool or whatever, and versus professionalism, efficiency, and getting the job done.
Yeah, and I don't care so much if they're nice or not nice or whatever. I like working with you, obviously, because you're a friend. But what I care about is if they tell me yes, I can go 30 days with this guy and get him keys at the end of the deal.
Yeah.
And then it better be a yes.
It better be a yes.
It better be a yes for my client spending money and everything.
Absolutely.
Else. And if it's a no, I don't want to hear it's a no. I want to know, it's a no today.
Right.
But if we do A, B, and C, then I can help this person get to their end goals.
Yeah. And would you say in your experience, like when you send someone my way, that's what you get? Like, I don't know. I'm not afraid to tell you, hey, no, they're not qualified today, but here's what I told them they needed to do to get qualified.
Yeah, 100%. That's the only, I don't get a forever no out of you.
Right.
Right. I just get here's the plan we need to take to move them into what they want to do.
Yep.
And now you'll tell me they should not be buying a house ever, or or whatever, and I'll be like, well, I'm gonna try to stop them then.
I say, hey, Kelly told me to tell you these are not buyers.
Yeah, these are not buyers. But there's the other side of it too. So we also have overly qualified people that are intelligent with their money that leverage the loan and the property to build wealth.
Yeah, absolutely. Right? Yeah.
So Kelly and I, this is our strategy. We're going to leverage real estate build a portfolio. Hopefully, sometimes what our focus right now is trying to find commercial properties that have residential on them, so that we can get, the property pay for itself.
Yeah.
There's like tons of different strategies. What do you see for buyers that have done really well and built well through real estate? What do you see from those types of people?
As far as what they're continuing to do,
Yeah,
or
what have
they done?
Yep.
I mean, I think a big thing right now is if you're talking about, real estate investment. What I see is commercial investment. I think is on the rise as far as what people are looking for from an investment perspective, right? So, because you can. When you're in an up market like this, right? Everything is at, we say the peak, but man, the peak hasn't hit yet, or if it has, it's just continuing to go up. But from a residential real estate perspective, single family homes, I don't see them buying as investment properties right now. It's commercial, right? So they're looking at hotels, they're looking at apartment complexes. Those types of things, and if they are purchasing anything from a residential real estate, which by the way, that's 4 units and less, right? So anything under 4 units is considered residential. Anything over 4 units is commercial. So if they are looking at investment, the people that are wise with their money, these investors that have a lot of money and know how to invest wisely, they're looking at multi-unit properties, which, as you know, Steve, we don't have a lot of in our area.
No.
So, I think our struggle in our market is a lot different than when you're in a small market like we're in. Inventory is always our struggle, right? Sure. So we struggle with inventory. People, as many multifamily properties that are out there, there's not many being listed for sale. And you would think, wow, in this market, everyone would be dumping them, right? But again, every investor is different. Some people are looking for that flip and that quick buck, and some people are like, I'm paying the note off and I'm cash flowing $4,000 or $5,000 a month on, especially with rents being as high as they are, right?
Yeah, they're ridiculous.
Yeah, it's insane. So that's what I'm seeing. I'm seeing commercial being more of a investment on the investment side than I am residential real estate. We deal with the industry right now, at least here in our market. We're in a first-time home buyer frenzy, I would say. It's everybody's coming hot and heavy. I'm a first-time home buyer, and they expect just someone to hand them money and get them in a house because they're a first-time home buyer. So we've got a lot of that I educate people on.
Let's do it now. So because we get the call all the time too. I'm not talking about VA. VA
Correct.
Separate. You can come into VA with no money down. And I think other than because there is a PMI.
No, not on VA.
But not with VA.
Correct.
Right? So you can keep all your capital, buy a house, even if you have a down payment.
Yeah, absolutely.
But what I'm talking about is it's pushed that you can buy a house right now with zero money down, and you can ask for closing costs, which is a myth.
Yeah.
Well, you can ask for it, but you're not going to get it.
Yeah.
But
you'll never get your offer accepted.
No, right. Yeah, it's too competitive to ask a seller to go pay you for your closing costs. It's not happening right now. That's not that
especially
time.
not at all. Not when they have 15 offers to look at.
But there is programs, lots of them, that will allow you to buy a home with zero money down.
Well, yes and no. So there's actually not a program that will allow you to buy a home with no money down.
Before you go into clarifying, because I understand why you're right.
Yeah.
But you also got to understand that on the internet, you can.
Oh, absolutely.
Right? You can. You can definitely buy a house.
No money down.
Why is that not true? I know you're heading there right now. Like, what does that mean? There's still closing costs. There's still
absolutely
all that stuff still applies, but the way they've packaged it.
So the reality is there's really 2 down payment assistance programs in the state of California, right? So you've got Cal HFA, and then you've got I guess essentially there's 3. You've got Golden State Finance Authority, which has the Open Doors program and the Platinum program, right? Those programs, depending on which one you do, so Cal HFA, they both have down payment assistance for both conventional and government loan options, right? Those programs, lenders charge a origination fee because there's no money it's paid differently to the lender than a standard FHA loan or VA loan, where we have service release premiums that we get on the back end when we sell the loan. The investor pays us. We have margins. So the only money that any lender makes on those is the origination that they charge, right? Okay. So and the origination is between 1.5 and 2 points based on the lender, right?
That's why you guys are rich.
Yeah, I was just rolling in it. Do you see my Bentley outside?
Yes, I do.
With the spinners?
Yep. It's parked right next to my Toyota Tercel.
Do you have spinners?
Yeah.
Well, as long as you have spinners.
Yep.
So 1.5 to 2 points, and that's it, right? So then those loans are serviced by a designated servicer that buys that services all the Cal HFA loans, and then with Golden State Finance Authority. So Open Doors program is serviced by Gateway, and then Platinum is serviced, I think, by U.S. Bank still. So point is, we charge 1.5 to 2 points. So let's say, for instance, the max on the Open Doors is the highest DPA, down payment assistance, that you can get, right? So on a conventional Open Doors program, you can get up to 7%. Right? And there's so many variables within this, so I'm not going to get into them because, my God, it would take forever. Okay. So let's just say the best case scenario, you can get 7%, and we're going to charge as Academy Mortgage, we charge 1.5 points, right? So we are on the low scale versus 2 points that some lenders charge, right? Sure. So it's because they're decided that. So we charge 1.5, right? So if you're at 7%, right, you're going to get you're going to take 1.5 out of that. That leaves you with what?
5.5.
5.5%. Okay. So now your minimum down payment on a conventional loan for a first-time home buyer is 3%. Oh. 3% for a first-time home buyer. Okay, you have to be a first-time home buyer to do a 3% down. All right, I'm not on conventional. So you do your 3% down. You had 5.5, right? Yep. So you have 2.5%. 2.5% is not going to cover 100% of your closing costs. It's just not. Okay. Also, I guess on a $450,000 purchase, it might, right? But it depends on the time of year. You've got your prorated taxes for your. It's just too detailed to get into, like, on a podcast. But the point is, you may come into closing with $1,000, $1,500, $2,000, but you're coming in with something. Right. You're not coming in with no money out of pocket, right? Like I said, unless you can get a seller credit, which isn't happening. Okay, so. That's just one program, and that's the program I just explained to you that gives you the absolute most money. 7% down payment assistance.
Right, that's the biggest one. Now, that 7% is a gift.
No,
it's not.
It is not.
You don't ever have to worry about it. It's just free money because the government gives you lots.
Everybody
of free
gives. Yes, absolutely.
Okay, so where does that come from?
So 3.5, half is a gift, and then half is a second lien on your home that has to be paid back when you refinance, sell the home, or in 30 years when you pay that note off. So that is the only program, let me just tell you that right now, that has any portion of that is a gift. Okay. Cal HFA, but here's the thing, you pay handsomely for that. So the interest rate on that is 5.25%. Okay. Well, what's the market rate today if you had your own down payment on with good credit, and you had a 3% down first time home buyer purchase, and you had your own down payment, you have good credit, you're at 3%, 3 1/8. So you're going to take a 2%. You're going to take a 2% hit in interest rate. 2% is massive, by the way. So if you take a $350,000 loan, that 2% is well over $250 a month. Over in payment.
30 years.
Yeah, in payment a month over 30 years. Just to get some down payment money, half.
Who has a calculator? Like, how much is that?
I have a calculator. It's in my office, folks.
Could you hear us out there?
Yeah, Kelly can hear us.
What is that, $250 a month over 30 years? Just out of curiosity, how much this 0.5% gift gives you?
That'd be 250 times 360. 90 grand.
90 grand.
Yeah.
So you can't come up with $9,000, but you can come up with 90 grand?
They're like over 30 years? Yes, I can. Thank you.
Yeah. So, and that's part of the problem why you don't have 9 grand, is because your thinking stinks. Right, you're thinking, I don't mind paying 90 grand over 30 years to avoid saving 9 grand today, and you
save 9 grand in and if you really sit, and I've sat down with people and talked to them like, listen, hey, here's your income. Here's what, give me your pay stubs. I'll show you. This is what you net. And you start showing people what they actually need, because they're like, I don't have that at the end of the month. Well, let's talk about the 96 trips you made to Starbucks this month.
There you go.
So let's not do that. And that's $450. That's it all starts adding up, right? So once you put people on a plan, you show them like, listen, in 3 months, you could have that $9,000.
But that's not instant.
No, but that's what they want. They want instant.
I know, and I'm not coming from a place today where I'm talking about I've done everything right my whole life.
Nope, absolutely not.
So I'm
not.
just saying, but I have grown and changed the way I spend money and the way I make money and what I do with my money. So hopefully this is just something to help somebody say, okay, I don't want to pay $90,000.
Yeah, exactly. And then I think for me, it's like I'm at the place in my career where I've been coached and I've come under people who are extremely successful.
Oh, thank you.
And yes, thank you, my friend. and I've listened to them.
Yeah.
And I've actually taken what they've said and I've implemented that, and I'm where I am today financially because I take the advice of people who have done it instead of being like, I want it now. Like, I take that advice and I work towards these goals. So, and everybody's at a different place in their life. Financially, goal wise, and that's fine. But take the advice of people who have been there, and if you implement those things, there's a reason why they're where they're at. Yep. And I'm continuing to grow every day. I'm continuing to try to find paths to continue to grow my success and be more efficient, and also be just a better overall person too. I mean, that's a big factor.
Not just money. Yes.
No, not just money.
And you slid by it, but the key in that is I'm taking that advice from somebody that's where I want to be.
Yes.
And then to unpack that a little bit, where was the advice coming from that got you in the bad situation? Because you learn habits from people that you respect without actually thinking about where are they and are they where I want to be before I'm actually taking.
I think, and I think honestly, I was probably one of those people, early on in my career that just wanted everything now. I want it now. Like you fall into that whole entitlement. Like I deserve this now. I bought my first house 6 months into this industry, and I came out of a $11 an hour job that I was like, well, I'm doing good in life. I was 21 years old, right? So I came out of this, and then within 6 months, I had made over six figures in my first 6 months in this industry, not knowing one thing about loans. This was 18 years ago. And so then all of a sudden I thought I was ready to buy a house. So what did I? Yeah. So I just bought a $400,000 house at 22 years old and knew nothing about paying a mortgage or nothing. I did mortgage, but I knew nothing about it.
Right.
And so I learned, obviously like everyone did back then, at that point I got up to, I think 3 or 4 houses. And then it went all bad. Right. Because I didn't. Yeah. And I can blame it on the economy. I can blame it on, the market tanked and how, but it was just bad financial decision after and it was I want it now. Oh, I see this. Let me just go get it. And it just needs to be more calculated. And so now I really lean into the people. I make sure that the people I put in my life are people that I respect and that have done it right. And I can look at their success and say, well, you actually have done this and you've built this and I can see it. It's tangible. Yep. I respect you. I put you in my life. I follow the guidance that you give me. And, and then I just want to help other people, get to that point as well. Thanks everyone for tuning in to our first Rebel Wealth podcast is what we're calling it. So
Rebel Wealth Radio.
Rebel Wealth Radio.
Or podcast.
Whichever one sounds good. How about everybody votes on it? No, but thanks so much, guys. Yep. We appreciate it. We hope you guys like the content that we're bringing to you. We enjoy being here, talking to each other, and we hope you guys tune in. We're going to be doing this. We don't really have a set schedule. We're just trying to kick this off and bring value to people, any and everyone. And when we may open it up for questions but we hope you guys tune back in again next time we're on. Thanks so much. Steve, thanks so much. I
No, thank
appreciate you,
brother.
my friend.
Yep, it's always nice chatting with you. 30 minutes goes by really fast with you. And then I'd like to, maybe as people watch the episodes and stuff, I'd love some feedback.
I
I
would
want to
absolutely,
learn more
yeah.
about this or that.
Yeah, I'd love
It'd
to.
be awesome.
Absolutely. And that'll help create content where we can answer people's questions and help educate them and get them where they need to be.
Yeah.
And I think that's gonna give us what it is we're looking for. We're looking to help people grow. We're looking to pour back into people's lives, right? So we're just at that place in life where it's time to give.
100%. And maybe we can do some guests every once in a while too.
I would
So if
love
there's
that.
somebody
Yeah,
people
bring some
wanna
financial
talk about.
advisors in, and absolutely.
Yeah, that'd be
Absolutely.
good.
Well, I appreciate you so much, man, and I'm looking forward to many more of these. It is exciting. It is informative, and next time we'll really dig into the world of real estate and what it is you're seeing on
I like
your.
that one.
Absolutely. Yep. Because I'd like to be educated in your world just as much as you want to be educated in mine.
Yes, sir. All right,
All right,
cool.
brother. Take
All right.
care. Have a great day. Thanks, everyone.